What's going on, y'all? Do you guys know what stock is one of the worst performing stocks of the year 2024? Do you think that stock is going to go up over time, or do you think it's going to continue to go down? Well, we're going to talk about why this stock might be a buying opportunity and when, and maybe right now might be a signal that it might be time to buy. But 16 years of practicing, I'm a certified financial planner here in beautiful Jacksonville, Florida. Before we get started, like always, like, subscribe, share our channel. As we continue to grow, we want you guys to grow as well. Now, on these YouTube streets, I just give information and you guys do what you want with it. But in real life, I'm a certified financial planner, brought in over $250 million in assets, doing something right. Don't get it right all the time. Sometimes gets it wrong, but I'm here to help. Doing the good times, and today with the market being down, the bad. But let's go over that stock and how we might be able to make some money, even though right now it is in the pits. Lego.
Let's turn to Tesla. A big story out this morning. Shares of the EV maker, well, they have certainly struggled so far this year, off more than 30% since January 1st. But the big report out.
Down by 30% this year. This is Tesla we're talking about, right? Elon Musk, one of the richest people in America. Now, made a mistake with X. We could all agree with that. Way overpriced. And what is he doing with it? We don't know. But they do solar. They got the Cybertruck. They got SpaceX. Smart person. The market's up this year. Why is Tesla down by over 30% before today?
This morning that the company is looking to cut costs, potentially laying off or is laying off more than 10% of its global workforce. Yahoo Finance's Pras Subramanian has been following this story, joins us now with the latest.
Now, 10% of the workforce, that is a huge number. Last time they had a layoff in workforce, it was 2%. The time before that, it was 6%. So they typically do not like to lay off. We're talking about a workforce of 144,000 people. So we're talking about 14,000 individuals, which is horrible, that will be displaced later on this year. So from a profit standpoint, any company wants to cut costs, and the biggest cost is labor. I don't agree with it, laying off anybody, but the fact is the fact. So that's why they think it's going to propel their stock.
Just on those details, Pras.
Hey, Shauna, what's up? So yeah, basically Electrek, the blog, the tech blog, basically had this, they got an email from, or secured an email from Elon Musk confirming that 10% of staff are going to be cut at Tesla. He's talking about how they want to set themselves up for the next growth cycle of the company and the layoffs. There were some redundancies there, but they were painful, but needed to be done. You know, I can't say that we were surprised here to hear that following their Q1 delivery report where such a massive buildup in supply, something needs to happen here. And I think that's what's going on right now with this.
Now, deliveries. It was a lot less deliveries, meaning that people bought their Tesla and it was delivered to their house. When I bought my Tesla, a little bit different. I don't like to buy anything new, so I bought mine on the Tesla pre-used or pre-certified store. So it didn't get delivered to my house. I had to go to the Tesla store and get it, right? If it's not new, you got to get it from the Tesla store, which is fine. But they deliver to you. It makes you feel good, too. They take it to your house. It's there. Check out all the bells and whistles. It's pretty cool. But not a lot of people in the first quarter bought Teslas. And the rumbling is that this second quarter, not too hot either.
Stock. You've seen the reaction there to the downside here, not exactly a positive move. I think we're hearing from Wall Street analysts like Dan Ives telling me that it's an ominous sign for the company to be doing this right now, given the fact that they're navigating this quote-unquote Category 5 sort of storm here with their demand story. I also want to add separately that the Electric blog reported that the Cybertruck was actually going to have its production shift length shortened. And that sort of kind of flies in the face of what we've been hearing about demand for that truck, which supposedly is off the hook. So a lot of things happening there in Tesla land right now.
So think about that, right? Demand off the chain for the Cybertruck, right? I haven't seen the Cybertruck yet. I know they're out there, but I haven't seen one personally. So that means that demand may be high, but for whatever reason, they are not creating them and dropping them off or delivering them like they're supposed to. So with the reduced workforce of 10%, and you're going to shorten the time it takes to make it, how is that possible? Is it AI?
Pras, what should investors keep tabs on as we're waiting for more of the details?
Ooh, boy, no Diddy. He clean, though, boy. Got the part, got the Steve Harvey lineup.
To really develop around this, and how do they price it into the stock going forward?
I would have expected maybe a move to the upside here whenever you hear about other automakers doing sort of similar moves, not to the extent of 10%, but I guess it's so extreme that investors or maybe Wall Street even a little bit concerned here about the fact that is the demand sort of even worse than what we're hearing. We're going to get earnings from the next week, so we'll have a better idea. Probably going to ask about Cybertruck demand, ask about what the labor sort of story is looking for Tesla right now as it sets up for potentially that Gen 2 vehicle that we heard about, and then it kind of went off the table and now might be back on. So we'll see what happens next week.
So my profiteers, again, like, subscribe, share. We're going to go over Tesla in the charts and why, in my general opinion, I don't know about this stock. We shall see. But he said that because the cut was so much, 10% of workforce, that Wall Street is skittish about this. Now, this was done in the morning time of the 15th before the market opened, which was great. But when the market closed, not so good. Let's go over Tesla. Let's look at really what happened today after the market digested its stock. My profiteers, not good. Is this in the uptrend or downtrend? In 21, uptrend, right? Oh, we love those days of 21, right? Up 92%, almost 100%. Then the downtrend. And the downtrend was a trend of all trends, right? Down by 75% when the market, NASDAQ that is, was down by 32% from top to bottom. Not good. Did double in a worse way. But slowly but surely, January 2023, right, started this uptrend again. Now, did not get to the point of overbought, right? So, okay, buy opportunity in the blue. But ever since the buy opportunity, my profiteers, whoa, ever since then, as we break it down more, this thing is trending down, right? From its high, July 23 to now, down by 46%. And for the year, now by 38%. Down by 33 Monday morning. Now with a 5% loss today, down by 38%, almost 40%. One of the worst, I repeat, one of the worst performing stocks in the S&P this year. Yes, Tesla. So from an investment standpoint, because they made the announcement, it is going to be a larger revenue. Now, it might take till third or fourth quarter of next year to have that revenue larger. Again, we hate anybody to lose their job, but it is what it is. But from a revenue standpoint, they will have more revenue. We also know that with the Fed, my baby, TMF, they are expected to lower rates. Now, we thought the rates would be lower in May. Won't happen. Looks like we're looking at September, October, maybe even November until they lower rates. And we know lower rates help manufacturing companies like Tesla, but that ain't going to happen anytime soon. So strong possibility Tesla continues to roll over to the downside. Right? Now, will it get to, the oversold part of $82 a share? I don't know. That's a huge roll. However, though, we typically like to look at these from a top to bottom standpoint. And right now, top to bottom, right, that is 37%. So we do another 37%. Whoop. Where it is right now, we're looking at about $102 a share. Wow, that's crazy. Talk about a far from grace being from $400 to $37 to $100 a share 2.5 years later. It could happen. Now, how long will it happen? Tesla's probably going to have a tough couple of months, even to the summertime. So if Tesla does get to 102, great buying opportunity, in my opinion. Can it continue to go down and hit that again, the oversold mark at $77 a share? Yes. But if it goes down to 102, this is where I think the opportunity starts. Right now, yes, if you buy it now, if it gets back to where it was, that's awesome, right? That is an 85% gain. So right now, not too bad. If it gets back to where it was completely, right, Jiminy Christmas, that's 150% gain, right? So right now, not bad long term. But if you want to take it with the biggest bang for my buck, have that risk reward ratio a lot more in your favor from a risk and reward standpoint, at 100, in my opinion, $102 a share, anything under that, you're gravy. I believe in Tesla. Now, Elon Musk, he's done some idiotic things over the years. We can all agree to that. But I think Tesla as a company, as they're monopolizing the whole charge station, right? They have a charge point. As more charge stations pop up, they're going to be involved with that. Every new Wawa, yes, Wawa gas station has Tesla charger stations in it. So they are slowly but surely buying the block per se, or trying to build a monopoly on charging stations and battery cars. So it's just a matter of time before this catches on to Wall Street. And with the extra revenue that they have, that is going to be showcased third, maybe fourth quarter of this year, we should see some nice growth from Tesla. So yes, the market down like crazy. Tesla, one of the worst performing stocks of the year, may go down even more. But outlook wise, a year and a half, 2 years from now, I definitely think it's a buy. Now, when it's a buy, we don't know. But if we close our eyes today, 2.5 years from now, definitely think that it will at least, nobody knows about the future, but at least we're looking at a 85% gain. Takes 2 years, 85% over 2 years, 42% a year, not too shabby at all. So there we go, my profiteers. Tesla, not the best. Tesla, one of the worst performing stocks of the year, but we do believe that Tesla will eventually recover from today. Great recovery over the next 2 years at 82%. If it goes down to $100 per share, or even the oversold number on the weekly charts, which is $81 a share, great buying opportunity as it gets back to where it was a few months ago. We're back to almost $400 a share in 2021. We're good, y'all. So anyways, like, subscribe, share to our channel as we continue to grow. Let me know what you guys think. Comment below. We like Tesla, staying away from Tesla. Is Elon Musk dropping the bag? Has he dropped the bag already?
And you just wanna get paid, tired of making the money mistakes. Make a payment on your bills and you still late, yeah. Painful profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, Painful profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you know, and it could be different, you know.